We can start this.
Um, good afternoon, everybody. I hope I'm audible to all of you. So welcome to the webinar, Avoiding Pitfalls in BRSR. My name is Anviksha, and I will be moderating the session for today. We're absolutely delighted to have you all join us, and I'm hoping that you get to take away a lot from this webinar. So today's topic, as we all know, is absolutely of the utmost importance, especially in the light of NSE and its recent circular that came out, which has identified certain mistakes or certain loopholes that you can say that were there in BRSR submissions for the fiscal year of 2022 to 23. And that circular by SEBI through on the website of NSE can be seen as a wake-up call. It could just as well be interpreted as a heads up for more meticulous scrutiny of the data inputs in the BRSR reports of companies across all industries in the coming future, in the upcoming years. And it is a very crucial step for which calls for improved sustainability reporting practices to ensure that data inputs are more accurate.
You're on mute, Anviksha.
I'm sorry, how long have I been on mute for?
Maybe last few seconds.
Okay, all right. So I just, so as I was saying that the circular by can be seen as a wake-up call. It could be just as well as be interpreted as a heads up for more meticulous scrutiny of the data that will be put in to BRSR submissions in the upcoming years. And preparing a sustainability report can be pretty daunting. There are multiple layers to the report that can make the process very tedious, can demand too much manual work, and can essentially make the process and the deliverable more prone to errors. So this webinar session will go into these very details and can help you understand how you can tackle these issues and can make your BRSR audit ready. So all in all, we will be diving into these very issues that companies are facing in managing their sustainability data that you will see that primarily happens in Principle 6, which, as you might already know, covers the environmental data like energy consumption, like emissions, like water usage, etc., etc. So I want to take a moment to introduce our speakers for the session. Firstly, we have Mr. Ajay Phatak. Mr. Phatak is a trustee and a faculty at the Ecological Society, and he has dedicated many, many years to the field of sustainability, has taught environmental history, energy, ecological economics, business in society and sustainability. And evidently, he's an expert in all matters that is environment. Joining him is Mr. Sunil Dade. Mr. Dade has also a very strong background in Indian audits and account services. He has served as the additional deputy comptroller and auditor general, a very esteemed post, and was also the former director general of the International Center for Environment and Audit and Sustainability, Sustainable Development, ICED, so it's called. So both of them come from decades of extensive and a lot of experience in sustainability and in compliance regulations. And I think we all could really avail this opportunity to learn a lot from them. And just to reiterate, as you already saw in the slide, there will be a dedicated Q&A session, and you can also meanwhile put your thoughts and comments if you have any. You're free to put them in the chat. We will compile them all together, and we will be answering your questions either on the platform or through email later on. So without much further ado, Mr. Ajay can take it up from here, I think.
Can you go to the next slide, please? Brilliant. So thank you, Anviksha, for providing the context for this particular seminar. And I'm very delighted to be part of this session. And I'm very hopeful that the audience here goes back with some very interesting insights into aspects of BRSR. So I am going to spend maybe 15 or maximum 20 minutes on some of the background, in the sense that why did we talk about BRSR in the first place? Why BRSR was introduced? What was the reason why this has become a very important part when we are talking about reporting at the corporate level. So to start, I will give you a quick on the historical context of BRSR. So actually, if you look at it, BRSR is very closely related to the international standards such as GRI or SASB. So these standards and BRSR standard that is contextualized for India are fairly similar, but BRSR probably is on a little stronger footing. So just to give you a quick history, first India introduced something called as the National Voluntary Guidelines on Social, Environmental and Economic Responsibilities way back in 2011. And then responsibilities of business in 2019, NVGs were revised to form national guidelines on responsible business conduct, known as NGRBC. In 2020, SEBI introduces new BRSR framework, which is basically a revision, replacing from the existing framework called BRR or Business Responsibility Report. And in 21, BRSR was made mandatory for top 1,000 listed companies. From 22 to 23, basically this has come in force. So top 1,000 listed companies will have to report BRSR or have been reporting, BRSR from this particular financial year. So essentially, this evolution also shows that India is getting we are getting growing prominence in the international arena, and because of the commitment to sustainable development and responsible business practices. So that's a quick context. Now, if you go to the second point here, which is the purpose of BRSR. So purpose of BRSR is not just saying that we want every organization to be compliant, because compliance is already normally the first step in really becoming socially and environmentally responsible. While compliance is going to remain very critical, it is also important to look at BRSR as an opportunity to understand multiple stakeholders going much beyond the conventional shareholders. And then once you are in the position to put out a correct, proper BRSR, it can also serve eventually to ensure that your business strategy is well aligned with the global sustainability goals and standards. So purpose of BRSR is not merely to say this is another compliance and another tick mark, but it is supposed to be a guiding light for your future strategy as far as business is concerned. Yes, let's go to the next one. So quick numbers here. As we talked about that, more than 1,000 companies now have published BRSR in FY 22-23, even while only the top 1,000 were supposed to publish. There have been companies coming in and saying that we would publish because they started realizing that this is going to remain an important aspect to uncover various risks that they probably did not uncover until now. So there are 3 sections as part of this reporting, 9 principles against which we report. And there are 140 questions that you need to answer to actually get to the report, right? So you're essentially creating a profile, so to say, of your company in terms of what you should disclose, what you should not disclose, and why. You also have to justify at many places, why are you saying what you're saying? So it is fairly comprehensive from that perspective. The inputs that therefore you need to collect are not necessarily from just finance or just operations. All your departments, all your divisions within the corporation are involved. All the geographies within the corporation are involved. In fact, going forward, even your supply chain is going to be involved as part of this reporting. Your customers will also become involved and in part of this reporting. Right? So minimum, as you see here, compliance, HR, sustainability, finance, IT, legal, but this is just a partial list according to what I see. You need operations, you need business to be very much involved in first providing inputs, providing guidance to reporting, and later in terms of how this report is actually consumed so that the business strategy can very well be aligned with this whole global objective of sustainability. Next slide, please. So if you just look at these numbers, in 2022, 176 companies actually filed their BRSR reports. The number grew almost 5 times, or actually more than 5 times in 2023. Now that essentially tells you that companies have understood the importance, or they're understanding the importance of the fact that BRSR reports must be filed. Of course, one part always is compliance, but now we see that they can and they will go much beyond pure compliance when we are talking about these companies coming in and filing their BRSR reports. Now that SEBI has access to, let's say, more than 1,000 BRSR reports, they are in a position to understand how these reports are coming out, right? So they are not yet penalizing companies saying that, the report has not been filed right. Not yet, but they will sooner than later. That essentially means that SEBI is therefore putting out, guidelines, as you can see, in terms of saying that, these are the areas where maybe the companies could do better. Yeah, or maybe there is some misunderstanding in terms of interpreting a particular way of collecting or reporting data, right? So the good part, as I said, is almost 5 times increase in just 1 year in terms of reporting, maybe partly because of the fact that for top 1,000 were supposed to be publishing BRSR, but also additional 64 is an indication that more and more companies see this as something where they have to start complying. Yeah, next one, next. A very quick comparison of BRSR and other global frameworks, just for your understanding. If you really look at 3 important global frameworks, GRI, SASB, and TCFD, BRSR is fairly comparable, if you will, to the disclosures that are required under these set of frameworks for reporting, social and environmental sustainability arenas. Most importantly, all the 3 important aspects that we now see have become more and more important. As all of you probably know that traditionally one was reporting only the financial numbers. Then came the social aspects, and then we started talking about this whole idea of CSR, corporate social responsibility. And now with the advent of new risks emerging, such as climate change, there is a need for looking at environmental aspects as well. So on, several, maybe couple of decades, you go back, and we only talked about corporate governance. Fast forward another 10 years, you started talking about social aspects as well. And now it is even more important that we talk about all 3 aspects, which is environment, social, and governance. And that therefore it becomes a complete structured approach to sustainability reporting. It is important that stakeholders are really engaged. Now, typically, when we talk about financial audits, large part of the corporation or employees or their suppliers or their customers are hardly involved, right? However, when we talk about social aspects, your stakeholders expand, and when we talk about environmental aspects, they further expand. So there is an emphasis on stakeholder engagement and clear transparency in terms of how you report. In terms of real differences, you're only talking about this, which is contextualized and slightly more thorough when we talk about BRSR as compared to other reporting standards. And it integrates with the origin where we talk about national voluntary guidelines on all these 3 aspects of business. Next one, Amish. So basically, as you see that numbers are growing, people are becoming more aware about all these 3 dimensions or 3 pillars of business success. And correspondingly, you will see that we are slowly but surely leading on aspects of sustainability with a very good, robust, and a thorough framework. In fact, as I said, we have in certain cases we have even gone beyond the international standards which are quoted in the previous slide. So I see this is going to become very, very critical, not from just from the compliance perspective, but this becomes kind of a guideline when we are talking about designing the future plans for the company, future strategy for the company, and so forth. Next one. So we now dive a little bit deeper into why are we really talking about BRSR, right? We talked about it a little bit initially, but let's now try and understand this from a little detailed perspective, right? So there are at least 4 dimensions, if you will, as to why BRSR becomes important. Now, most important reason for BRSR, leave aside the compliance part, is essentially what I call as BRSR provides you a tool for risk management. Now, as you probably know, most of the large corporates predominantly run on managing risks. At the highest level, it is almost impossible for the management to really understand each and every bit of operation, how much ever strong your management reporting might be. Which means that if there are risks which are identified and monitored on an ongoing basis, become a guideline for any course corrections if they are required, or any significant decisions that the corporates need to make. Right? So all the risks here are covered essentially. We are talking about regulatory risk. If you are non-compliant, SEBI will come and say that we can impose a penalty, for example, right? And they have stated their expectations, even while they probably will give some leeway in the first 3-4 years before most of the companies have a clear understanding of how these are to be filed, and how data has to be collected, how data has to be defended. That also becomes important. So this is from the enforcement perspective, but it is also aligning with our voluntary guidelines and global needs. As for example, if my company is, let's say, exporting 50% of my product, then it is important to align our BRSR reporting, because not just that we are okay and we need to comply, but also align them with the importing country, right? As for example, you might know something called CBAM, the cross-border adjustment mechanism that EU has started talking about, right? And then at some point in time, sooner than later, we will have to align with them if we decide that we would continue or we would want to continue exporting to EU. There's an investor perspective. Investors now have started looking at these issues with almost a lens, because more and more risks can emerge, and most of the risks for business are emerging out of these 2-3 sectors. Then we talk about customers. Customers are asking specifically for whether your business is responsible socially, and what are they doing for the environment, for that matter. Climate perspective, a big huge risk is emerging in terms of the changes in climate, primarily caused by excessive CO2 emissions, and therefore reporting on that and taking due actions so that these could be managed is also becoming critical. So with this, I'll hand over to Sunil, and Sunil will spend next few minutes talking about the rest. Go ahead, sir.
Thank you, Ajay. And let me say that this entire exercise of BRSR, as we can see, has been an exercise which is quite young. In terms of full disclosure part, these disclosures have started coming in recently. And most of you who are in the audience, I understand, would be involved or would be interested in these disclosures. And so in the next couple of minutes, and I hope to finish in another 15 to 20 minutes or less, what we are planning to do is we are planning to look at the analysis of the first BRSR reports which are available in public domain, which have come, and what is it that we can make out of these reports, and what can be done to make them better. How can we prepare to make good BRSR reports? That's something which we are going to talk about. But before that, let me just say that what is the policy perspective? What is the overall background behind this BRSR framework? And as you would see from this slide, a good BRSR report can help in developing inclusive policies. What are inclusive policies? Inclusive policies are those which address the concerns of all stakeholders. And as we dealing with business know, that any unsatisfied stakeholder is an alarm for the success of the business. And as this success of business depends upon stakeholders, it is important that they should be addressed properly. This another aspect of the policy perspective for BRSR is that it also allows for the assessment of economic and environmental aspect impacts of corporate actions, helping balance economic growth and sustainability. Let me tell you at this point of time that while all this is happening on the BRSR side, on the corporate side, there have been similar developments which have been happening on the government side. As you all know, in 2015, the world adopted what is called as the Sustainable Development Goals, and India is a party to this adoption. These goals have to be achieved by 2030. And in fact, if you have a look at the latest report of UN on the progress of these goals, you will find that the progress is not satisfactory. And hence, each nation will have to pull up socks and will have to work harder. These reports also help in identifying gaps and highlighting areas which need improvement in corporate practices. And finally, the policymakers, mostly in the government and in various regulators, you can use these reports to set benchmarks and performance standards which the industry will have to follow, because these will be evolved from the data which is reported by the industry itself through BRSR. Anviksha, can we move to the next slide, please? Yeah. Now, if you look at the results of BRSR or the disclosures which seem to be coming out in BRSR, you will find that recently NSE has issued a circular, and this circular has been issued in the month of May 2024. You'll find that the circular has two parts. One, it has an FAQs on BRSR. And second, it also talks about the errors which are commonly seen in the BRSR reports and talks of what can be done to avoid those errors. So if you look at the second part, you will find that there are three main types of errors. First are errors about data inconsistencies. These mostly relate to the differences which are within various parts of the report itself. Like you say one thing in one part and a contradictory thing in another part. Or you talk of different units of measurement which vitiate the purpose of BRSR. That is about data inconsistencies. The second type of errors which are seen are about incomplete disclosures. Now, what has happened is that in case of certain companies, you would find that there are gross omissions and no explanations. Now, these are the kind of omissions and incomplete nature of disclosures which have been highlighted by NSE. And the last kind of errors are the misinterpreted guidelines, where some people have said that some aspects of these disclosures are not applicable to them. Whereas, going by the nature of industry, going by the kind of operations, they are actually they're actually applicable and must have been disclosed. Can we move to the next slide? In the next few slides, we will look at a few mistakes which are highlighted in the NSE circular and which are common in BRSR reports. As you can see from this slide, on the right hand side, you have the details of the circular. It is May 10, 2024, circular number NSE CML 2024/11. And this is addressed to the company secretaries of all listed companies. And most of these mistakes which have been revealed are in Principle 6. Now, what is Principle 6? Principle 6 basically talks about environment related, climate action related disclosures, where a lot of errors seem to have stemmed from a lack of understanding. And we can also find that many companies have failed to disclose their plans for climate action. Now, let me clarify at this point of time that the BRSR disclosures are not only historical. Some of them are in fact futuristic. They require companies to not only say what they did in the last financial year, but they also require companies to state what they propose to do going ahead. And that's one part where there are major omissions which have been noticed. Can we move to the next slide? Yeah. Now, this is a classic case of data inconsistency. As you can see, there are errors in data collection and reporting, and they can lead to inconsistencies in how metrics are measured, how matrices are used. And this is one example which is given in that circular, where you will find that the company has disclosed zero energy consumption from renewable sources in one table and reported the same to be 2,21,405.21 in another table. Now, both are not possible. Or either if you have zero renewable energy consumption, you cannot have a number in another table for renewable energy use. Remember, use and consumption are the same. Now, these are the kind of inconsistencies which have crept in certain BRSR reports, which need to be avoided going ahead. Can we move to the next slide? It's another kind of set of errors which relates to incomplete disclosures. Now, incomplete disclosures basically relate to missing or inadequate data which is required but which is not filled up or which is not appropriately depicted. Now, as you can see, this is an example where details of greenhouse gas emissions were supposed to be given along with its intensity, and the format is there. And you will find that in case of a particular company, everything in this is reported as nil. Now, this is a company which cannot have nil here, looking at the kind of operations they are in. They do use energy for consumption, and the kind of operations they have, this is not possible. So having nil in this is just not possible, and that has been pointed out. Let's move to the next slide, please. Now, this is another case of misinterpretation of guidelines. As you can see over here, what has been done is that this is about the disclosure regarding turnover rate of permanent employees and workers. Now, here, if you can see what has been disclosed for 3 years is turnover rate in each year. And if you look at the numbers, if you look at the permanent employees and permanent workers, it gives a rate of, it gives numbers instead of rate. Now, normally this rate should have been in percentage. Instead of that, what has been done is the company has given numbers, and this can relate to a different kind of inference altogether. Can we move to the next slide, please? Now, what is it that leads to, what is it that can happen because of the wrong information in disclosures, in wrong information in the BRSR reports. We would typically find that there are three kinds of risks which are associated with wrong disclosures. First is the regulatory risks. Now, these are the risks which involve penalties, sanctions, avoidable scrutiny, compliance violations impacting pecuniary fines, and liability for directors and officers, which is already mentioned in the Companies Act. Now, what would be the severest form of risk in this category? The severest form of risk perhaps is that there could be a delisting of the company from the stock exchange if the disclosures are patently wrong. There could also be mandatory corrective actions which could be enforced. And it could also lead to possibly greater scrutiny by regulators other than just SEBI. Because as we know, in the corporate world, our competitors would be more interested in our violations than someone else. And it is easy for them to simply write, let's say, if there is some kind of an irregularity regarding emission related disclosure. All that is required to be done is a small letter to the Pollution Control Board, and you will have the inspectors from Pollution Control Board landing up in your premises. Now, these are the regulatory risks. Second are the reputational risks. If you remember, a few years back, we had disclosures regarding child labor which were enforced. And we all thought that these are disclosures which may not really matter. But then when you started dealing with EU and EU started insisting that there is no child labor if you wanted to export, we realized the importance of child labor related laws. Now the reputational risks are something similar. Any wrong disclosures can impact the brand image of a company. They would result in loss of credibility, and the investors and stakeholders would have a suspicion about whether to continue their investment in the company or not. If some unscrupulous or if somebody who is not very friendly writes an article using these disclosures in the media, or if it becomes viral in social media, there are additional risks which are best avoided. The next kind of risks are the business related risks. These emerge from loss of trust from investors. At the end of the day, if wrong BRSR disclosures happen, you may find the credit rating of the company being impacted. And impact on credit rating results in the financial cost of interest rates which go up. There is loss of competitive advantage, and your stock price goes down significantly. Not only that, what happens in this process is that the risks which emerge from the business also impact operations. Like what happens is that if your reputation is damaged, and if there are people in your supply chain who think that supplying to you may not really result in a good image, you will find that they will go away from you. You may also find that certain customers go away from you. And this impacts from both sides, from the demand side as well as the supply side. And that is why, although the disclosures as such may not be scrutinized in near future in great depth, their impact is significant for the business. Can we move to the next slide, please? What is it that BRSR gives? And you will find that if you look at the original SEBI circular of 21, and as it has been amended over a period of time, there is something called as BRSR and there is something called as BRSR core. Now, what is BRSR core? BRSR core relates to those disclosures of those companies where a reasonable assurance is expected. I would like to spend a moment on what is reasonable assurance. Reasonable assurance basically implies an assurance that the disclosures which are included in BRSR can be relied upon by a reader. Does it take away the chances of mistakes? No. It does not eliminate the chances of mistakes because there is no 100% assurance. But all the same, there is a reasonable assurance, which means that unless there is an intention, the possibility of these disclosures being wrong is significantly less. Not only that, those who are going to certify the accounts of the company, they would also have their own checks and balances while reporting on the reasonableness of BRSR disclosures. And if there is a qualification, you all know the impact which it has. Shall we move to the next slide, please? Now, let's come to how these reasonable assurance in core KPIs has become mandatory. As you can see from the right-hand side, the mandatory nature of core KPIs in case of 23-24 was for about top 150 companies, 24-25 250, and by 26-27 around 1,000 companies will have to compulsorily report on the mandatory KPIs which are included in the BRSR reports. Let's move to the next slide. Yeah. Now, how do we prepare BRSR reports which are not only audit ready, but which contain an assurance to the reader? For this, I would say that we require three things. One, we require a multidisciplinary approach. As you would see, BRSR reports cannot be made only by finance professionals, nor can they be made only by sustainability professionals, nor can they be made by only legal professionals. So, there is a multidisciplinary approach which is required in preparing BRSR reports, where you require a team from different disciplines coming together and making these reports. As you would see, there are some disclosures in BRSR which require values, and there are some disclosures which require units other than rupees and paise. Now, all of these have to be compiled with reference to the data emerging from operations of the company, and also it has to be properly weighted from the compliance point of view. So one set of professionals are not enough. The companies would have to employ multidisciplinary teams to make these, and auditors would also require multidisciplinary approach in auditing them. The second thing is the skills and competencies which are required. As is obvious, the key skills required are data analysis, knowledge of ESG, and regulatory understanding. Now, what is required is those who are going to make BRSR reports need extensive training for the purpose of making of these reports. I understand that the Institute of Chartered Accountants, as a part of their continuing professional education, has now introduced something on ESG reporting with focus on BRSR. But again is specific for chartered accountants. What we require is internal equipment of the staff, of the people involved in making BRSR reports, who can make a good BRSR report which will inspire confidence of the readers. And for this, it is essential that not only the how part of BRSR is known, but the why part of BRSR should also be known. And for understanding that why part of BRSR, while there is a lot of literature available on the internet, I would say that some kind of focused effort, some kind of focused training internal to the company, specific to the area of operations, could be organized. There are a few commendable practices which have led to good BRSR reports. And you will find from this slide that these commendable practices include implementing robust data management systems where data which goes into the BRSR reports is not made but comes out of normal reporting in the corporate world. The second is internal audits and internal controls, which are specifically tailored to sustainability data and reports. The third commendable practice is engaging third parties for assurance for credibility and accuracy. In fact, if you have a look at the BRSR reports which have come up in the for the year ended 31st March 24, you will find that in quite a few companies, they have actually engaged third parties in certifying the BRSR reports, and the chartered accountants have relied upon these third-party assurances wherever they have been sufficiently well expertise-based. There are also certain specialized tools which are coming up. They could be used. And finally, if the BRSR reports are not made only annually, but it is based on a quarterly or half-yearly kind of consolidation, and that gets built into the annual BRSR reports, the chances of these reports becoming better are high. Can we move to the next slide? Okay, can there be some kind of a checklist for a foolproof or a sound BRSR report? Well, frankly speaking, one word answer is a comprehensive checklist is difficult. Although comprehensive checklist is difficult, it is still possible to have some kind of formats which could be customized company-wise for the BRSR reports where there is mapping of answers to the questions. This recent NSE circular, which has FAQs, could be helpful in preparing these kind of formats. Second, the accurate and uniform energy consumption and emission data, as also the water related data, if it can be sourced directly from the operations, that could lead to a good a foolproof BRSR report. Third, selecting not applicable is something which should be very carefully done. Not applicable should be selected only where a particular disclosure is not relevant, having regard to the operations of the company, and a reference could also be made to similar companies or to companies in the same set of industry, whether they also have not applicable or not. Then there could be ensuring reporting of sustainability data in prescribed units only. Because unless this is done, the comparability of the reports comes in question. Data breaches and customer complaints have also to be disclosed and truthfully. Finally, the rectification and communication of errors in previous years is possible. In fact, as those of you who deal with financial reporting know, that yes, there is a change possible even for the previous year's data, provided the notes to accounts, and in this case, notes to BRSR, appropriately disclose how these errors occurred in the previous years, how they are corrected, and on correction, what would the data for the previous year look like and how it would compare with the current year data. These are few tips which could help make good BRSR reports. There can be more tips, there can be more customization, but this, I suppose, should be a good enough starting point as a checklist for foolproof BRSR reports. Can we move to the next slide? And yes, thank you for your attention. We would be happy to take questions and answer them.
Thank you so much, Ajay sir. Thank you so much, Sunil sir. That was in fact a very elaborative, very well detailed and structured discussion. So as I previously mentioned, Mihika will now be taking up our questions, starting from the ones that we have already received through our registrations, and then I see there are a few that are in the chat as well, and then we can follow that up with opening the floor to the audience. Over to you, Mihika.
Okay, thank you, Anviksha. So firstly, we'll be starting with the questions that were submitted on the form. So the first question is, what is the sector-wise impact due to this compliance?
See, what is that as far as the sector-wise impact is concerned, the sector-wise impact would emerge for all sectors because BRSR is not sector specific. BRSR is for top 1,000 listed companies and their supply chain and demand chain. What I would say is that a company's performance would basically be judged with reference to their peers. So you cannot say that overall sector impact will be known, but for specific disclosures in BRSR, it would be possible to compare performance of company A with performance of company B as the units are similar and as the reporting is similar. Now over there, if company A has certain omissions, those omissions may impact the comparison, and over a period of time, these kind of omissions may come in for heavy criticism. Hope I have answered the question.
Yes, thank you. So like the second question that has come up is, how does this apply to online travel organizations like Booking Holding?
Okay.
For the organizations like online travel aspects, some of these calculations and reporting become slightly more complicated because a lot of things there are associated with the supply chain of many of these organizations. So as we understand scope 3 better, we are in a position to do a better job with the companies of this nature. And for that matter, most of the service organizations at one point keep feeling that we actually don't contribute to any problem, right? So, and that has been one of the issues also with SEBI, who have actually criticized financial services companies, saying that you just cannot say that. You also contribute, and you'll have to report that appropriately. And especially with this aspect of looking at supply chains coming in, scope 3 emissions coming in, it's going to become even more critical when we talk about businesses like, for example, online booking.
Right. So I hope that answered that question. So the next question is, do scope 3, are scope 3 emissions also involved in BRSR reporting?
The answer is yes, scope 3 emissions are also involved, but not for all. As you would have known from the circular, there are two types of reports. One is BRSR, the other is BRSR core. Now, as far as BRSR is, this particular question regarding emissions is related to the leadership part in BRSR core. So in case of just BRSR, it's possible to skip this question. But for BRSR core, for the 75% of their supply chain, this question cannot be skipped, and that will have to be answered. Okay.
Okay, thank you, sir. So the next question is there a difference between supplier and value chain partner? And will expected percentage coverage of supply chain, either in terms of spend or number of suppliers, sacrosanct?
Well, the question seems to be that is there a difference between a supplier and a value chain partner? The answer is the difference is very subtle. A supplier and a value chain partner value chain partners can be both on supply side as well as demand side. So the demand side partners who are in the value chain, they do not get covered in the supply side. And the 75% of the suppliers of top 1,000 listed companies have to be involved in these reports. At a practical level, going ahead, this distinction between the 75% and 100% will slowly vanish. Because anyone who wants to trade globally, they will insist on all their suppliers reporting BRSR. So at present, yes, there is a little bit of a difference, but that doesn't really count much because going ahead, all suppliers would anyway be involved in BRSR reports. As far as the demand side is concerned, as of now, the demand side is not required to mandatorily report the BRSR disclosures. Okay. Can we move to the next? Yeah.
Yes. So next, we can move on to the live chat questions. On the other hand, please keep them coming. We'll do our best to cover as many as possible. So the first question that was asked was, what is meant by a materiality assessment and what is the role of it in a BRSR report?
Akash, would you like to talk a little bit about this?
Yeah, can you please repeat the question again?
So the question is, what is meant by materiality assessment and what is its role in the BRSR report?
So yeah, so basically materiality assessment is more about identifying the topics which can impact the organization in long term. So let's say we need to do, there are different stakeholders get covered during the materiality assessment, and where we identify which topic will impact the company's reputation growth, or how company will get affected if there is some climate change happens. So the thing is, in one activity, you identify the material topic and focus on those material topics to reduce the different types of risk. As Sunil mentioned, that majorly reputation risk, regulatory risk. So how you can reduce the reputational risk by identifying the material topic and working on that. On the other hand, let's say if you identify climate, or rather if you identify emission reduction as a material topic for your organization, and you publish that information, then investors and external stakeholders will expect you to talk about those actions, whatever you are doing on those material topics in your annual report, in your sustainability report, and in your BRSR report. So BRSR report is more about the disclosing what you are doing, and material topic is more about identifying the topics and acting on those topics.
Just to make it simpler, materiality of a topic is basically importance of the topic to your business.
Yeah.
It's like saying you have an 80-20, right? Where you say that 80% of the or 20% of the issues cause 80% of the damage. So identifying those 20%, for example, which are material to your business or which are most important to your business, is the concept of materiality. It is not 20 and 80 as numbers, but I just wanted to emphasize the concept of materiality.
Yeah.
Okay, thank you, sir. So the next question is, somebody has asked this from their point of view. So it's, I, on behalf of my organization, require clarity on Principle 8 under the Essentials Indicator category. So that is, businesses should promote inclusive growth and equitable development. Specifically to understand the definition for trading house and dealers and geographic database for job creation in smaller towns.
Okay.
Yeah, go ahead.
Okay, now this is a very specific question which would ideally require a detailed answer. But at present, what we will do is we would say that you could refer to the FAQs which are there in the NSE circular, which give general principles which govern this kind of an issue. As far as data regarding specific sectors and job creation is concerned, I would say that for an enterprise, the job creation data is known to the enterprise. The question really arises about the indirect jobs which an enterprise creates. And how do you measure those indirect jobs? So while giving the numbers, what can possibly be done is there would be certain assumptions which would have to be made while identifying the number of indirect jobs. And those assumptions would have to be very clearly spelled out so that this particular number which you give of indirect jobs can be relied upon. Ajay, would you like to add?
Yeah, I think in addition to that, when we talk about inclusiveness of your workforce, it essentially talks about making sure that you what I call as the concept of stakeholder expansion that has to happen. So if you look up this concept of stakeholder expansion, you know understand this particular topic a little bit better.
Yeah. What you can also possibly do is that RBI comes out with some definitions and with some kind of databases. Those databases to define the geography can also be used.
So I think this is very important and important question. So what we will do, we will explain this question. We will write a very detailed response, and we'll get back to the audience about this particular question. But I think Sunil, you have covered the essence of the question very well. Thanks.
Okay.
Okay.
So I think we have few more questions from the chat. So what we are thinking now, sorry Meeta, for the interruption. We will open up for the audience for next 5-7 minutes, and we will get back to all the questions via mail and different. We will communicate, respond to the questions being asked in the chat as well. Yeah. So over to audience. If anyone wants to ask any question, happy to take. Anyone? Otherwise, we can continue with the questions we have in chat. Hi, Jyotish, you unmuted yourself. Not sure you are asking question or.
Hello.
Hi.
One question.
Hello, sir.
Put in the chat
Myself,
box. Hello.
I have a good doubt.
Yeah, please
Hello.
go ahead. Yeah, please go ahead, Mr.
Sir,
Gurpreet.
Sir, suppose a company is doing, for example, if they have to fill the BRSR form, can they use the same data or the sub-clauses of that report into the BRSR form?
I'm not sure. I couldn't hear the entire question. Voice got.
Okay. Sir, can we use one kind of ESG reporting data into the another? For example, from GRI to the BR.
Yeah.
Yes.
Actually,
there
that's
is no
the
problem.
expectation. Yeah.
Yeah.
Yeah, moreover, in fact, SEBI says that you can provide even just the links. You don't have to even duplicate the data.
Yes, that's
Yeah.
correct.
So, for example, if GRI is something which is accepted in Europe and you have already compiled data in GRI and you want to use the same data for BRSR reporting, you just have to point to it. You just have to provide a link.
Okay.
The only thing is wherever BRSR has specific requirements which go beyond GRI, there these links won't work. There you will have to come out with specifics. But wherever there are commonalities, you don't need to compile the data again. You can just provide links. That's good enough.
In fact, Gurpreet, there is a document which maps the questions within GRI and the questions which are part of the BRSR framework. If you want to know more about it, you can reach out to us later, and we'll be happy to share that with you.
Sure, sir. Thank you.
Sir, one specific question regarding the scope 1 calculation that has been given in Annexure 1 of BRSR. Related to data and assurance approach, they have given point number 3, quantity of carbon capture. So whether you can elaborate on that, what is meant by this particular description?
That question. So, see, basically, there are certain set of industries, especially industries like steel, cement, chemicals industries, etc. They actually spew out a lot of CO2 in dense form, which means that their flue gases might contain sometimes even 30-40% carbon dioxide. Now, it is possible for these industries to potentially capture this CO2 and you reutilize it for value-added chemicals, for example, or in certain cases even store that CO2 so that it doesn't escape into the atmosphere. So that is actually the meaning of carbon capture. So carbon capture is something which is only relevant to this industry class typically, which is called hard to abate industry, where you have a whole lot of carbon dioxide being spewed out, and unless you do something about it, your ability to prevent or get to net zero is not, it's going to be very, very hard. And these industries, as I said, typically are steel, cement, chemicals, petrochemicals, oil and gas.
Thank you, sir.
I've answered your question.
Yes. So regarding one thing, regarding this triple P multiplying factor for revenue converting to triple P, this purchasing power parity. This latest data will be available. It is available for like year 2022. It is available on the net.
So Jyotish, till now, the latest data is for 22 only, which is around 22 point something for India.
Yes,
so the latest data is for 22 only right now.
Okay, so we have to take that only multiplication factor.
Yeah.
Whatever is the latest.
Yes.
Yes.
Okay, sir. Thank you.
Yeah, thanks. So I think we are running out of time. So what I would request and suggest, if you have any further questions, please send us a mail. We will be happy, or give us a call. Happy to sort of come on a call and explain if you have any question related to BRSR or in general related to sustainability. Over to you, Anushka.
Thank you, Akash. There is a feedback form that is already, I think, shared on the chat, or if not, we'll share it shortly with you. Please do consider filling that out. It's for the webinar. I think thank you to everyone who has been a part of this session. I want to especially thank Ajay sir and Sunil sir for their very valuable time and, for putting this such a convoluted topic with such so effortlessly. And I hope that all of you get to take away some very insightful learnings from this session. So also thank you for your very good questions and that have kept the conversation going. And as Akash already mentioned, please feel free to drop an email, connect with us, call us in case you have any more doubts that need to be tended to and pertaining to BRSR or any other such topics. Thank you for joining in.
Thank you. Thank you, everyone. Thanks a lot. Bye.
Thank you. Bye.
Thank you very much. Bye.